Good morning, Ian Cooper here. I'm sorry I missed you last week. Had to get my son ready for another semester, which involved driving about 14 hours north. Always a fun drive. Anyway, markets are still pushing aggressively higher. However, there are plenty of reasons for concern, which is why we held on to the DIA and Triple Q puts for so long, which eventually went against us. However, as you can see in this chart of the Dow, it's now at all-time highs, which just is not sustainable. Even the NASDAQ is now at all-time highs, which is also unsustainable, especially with the trade wars, economic concerns, geopolitical issues, and the fact that investors are acting as if all were okay. In fact, they're acting just like investors did before the major crashes of 1929, 2000, and 2008. And unfortunately, many investors and traders are going to learn the hard way again if they're not prepared. The Dow Jones was up 300% between 1923 and 1929. Traders and investors believed stocks could only go higher. Speculation forced stocks to unbelievable highs with unjustifiable valuations. And then it all fell apart. Then between 1929 and 1932, the Dow Jones would lose about 86% of its value. And unfortunately, at that time, many weren't prepared. In 2000, dot-com optimism sent the Dow Jones screaming higher again to unjustifiable valuations. That would fall apart and saw the Dow wiped out again. Unfortunately, again, many were not prepared. In 2008, rampant speculation sent the Dow Jones to a high of 14,038 on the heels of a housing boom. Americans were buying homes they couldn't afford. Stocks were exploding on economic optimism and, again, unjustifiable valuations. And then, as we saw in 2008 with subprime blowing up, the Dow Jones would sink to 6,500. And again, many were not prepared. And it's all happening again now. What's also worrisome at the moment is just how overextended the Shiller PE ratio has become at 39.84. It's now at its second highest peak in history, and it's second to the massive dot-com crash of 2000. Before long, if today's market continues to push higher, the Shiller PE ratio could push to an all-time high, which means then that we would be in ridiculous mode, which won't end well at all. Also worrisome is just how calm the volatility index has become. Now just above 15, it's as if there are no market concerns. However, soon, as we often see, market complacency in the VIX will soon give way to fear again, which we really need to be prepared for to keep our portfolios safe. One way to do that is by investing in ETFs and ETNs, or exchange traded notes, including the ProShares Ultra VIX Short-Term Futures ETF, the UVXY, the iPath S&P 500 VIX Short-Term Futures, VXX, which is the ETN, and the ProShares VIX Short-Term Futures ETF, VIXY. These are just some great ways to help protect your portfolio from volatility, because the VIX is overdue for another spike from current complacency. With that, let's also take a quick review of our open and closed trades over the last 2 weeks across all of our programs. Let's start out with News Event Trade Alert. On August 6th, we picked up the AMD August 29th, 2025 160 calls on a brief pullback. We were also kicked out of the DIA August 15, 2025 445 put, which we had hoped would have done better with markets as overbought as they have become. On August 7th, we exited half of the AMD August 29, 2025 160 calls, which ran from 840 to 14 and a quarter. We would also pick up the AMD August 29, 2025, 170 calls. By August 11th, we would add the AMD August 29, 2025, 180 calls. We would exit the second half of the AMD August 29, 160 calls, which ran from 8:40 to 20. And we closed half of the AMD August 29, 2025, 170 calls, which ran from 8:75 to 12. By August 13th, we exited the second half of the AMD August 29th, 2025, 170 calls, which ran from 8:75 to 17:75. We also exited half of the AMD August 29th, 2025, 180 calls, which ran from 6:35 to 10:50. And then we added the AMD September 5th, 2025, 185 calls. AMD has been a very, very hot trade that we just can't ignore these days. Over in Trigger Point on August 5th, we picked up the Amazon August 29th, 2025, 215 calls. The next day, the trade would run from 595 to 730, and we held. We would also add the Amazon August 22nd, 2025, 215 calls. By August 7th, we would close half of the Amazon August 29th, 2025, 215 calls, which ran from 595 to 835. And we would exit half of the Amazon August 22nd, 2025, 215 calls, which ran from 705 to 1060. By August 11th, we would exit our Apple August 15, 2025, 215 calls, which ran from 650 to 1260. And on August 12th, we closed the Amazon August 20, 2025, 215 calls for a win. These ran from 595 to 910. We also closed the second half of the Amazon August 22nd, 2025, 215 calls, which ran from 705 to 810. Over in Tech Stock Profits, we had to close the AMD August 15, 2025, 175 calls for a loss, and we were also forced to close out the AMD August 15, 2025, 182.50 calls for a loss as well, unfortunately. Many more trades will be issued in Tech Stock Profits over these next few days. Over in Quick Moves, we closed the Apple August 15, 2025, 215 calls for a win. These ran from 590 to 1220. We also picked up the Chipotle, symbol CMG, September 19, 2025, 40 calls on oversold conditions. And we would go ahead and close half of our Palo Alto August 29, 2025, 175 calls, which ran from 585 to 775. And over in Algo AI, we did pick up the NVIDIA August 29, 2025, 185 calls. All programs will have many more trades coming up this week. We were also safely on the sidelines for a few days with markets still very volatile. And as you know, we'd rather be safe. At the moment, it's not about how many trades that we can push out, but the quality of those trades. And if we cannot find quality, we're not going to risk your money taking a potential loss by rushing a trade for the sake of issuing a trade. That's a great way to lose money, and we're not interested in doing that. At the moment, that's all I have for you. If you have any questions, comments, or anything that we can ever help with, please reach out at any time. We will speak again very, very soon. Please look out for many new trading opportunities this week across all of our programs. With that, take good care. We will speak again very soon. Thank you so much.